Parag Thakkar into our studios this Monday morning. Parag bhai, thank you so much for joining us. Okay, I want you to jump in first on not a debate, but a mini discussion we've been having since morning, where Neeraj thinks that the worst is yet to come. It's a fair portrayal?
I don't think that the upsides are guaranteed simply because there are multiple factors that are still beyond our control, including multiple contractions.
6 months down the line.
Yeah.
Possibly.
There could be issues, yeah.
Yeah, so it's a little more negative perhaps than what I am saying, to put it simply, instead of to put it in 2 or 3 words. My take is that GDP, the GST reforms that are coming, what we're seeing between India, Russia and China, is all going to, and what the US Federal Appeals Court has done, is setting us up for perhaps for a September surprise.
Correct. So basically, see, we would like to play it in a balanced way, which means that we are 90% invested, 10%, 8 to 10% cash will keep as a buffer. So if Neeraj's scenario plays out, we can take advantage of the. But as of now, the 90% of the portfolio, which is already invested in equities, we are comfortable with those stocks. And that is purely on the merit of individual stock to stock basis, not taking a particular call on a particular sector or something. For example, as we have discussed in the past, we are holding Hindalco in metal space and Tata Steel in metal space, or IT we have discussed in the past, or Reliance, Geofinance kind of stocks. So basically, we are quite comfortable with our 90% weightage, and we'll hold on to it. So the way I see in the market is, you are absolutely right. Many reforms will come definitely. We are seeing that our government is making a lot of efforts to to improve our relationship with other countries like China and Russia and all, which is very clearly evident. And let's see, as you rightly said, very importantly, if something happens to Trump's tariffs in a positive manner for India, then it can be a very big, and that's why 90% we are invested. But some buffer we would like to keep, because if this 50% tariff stays for more than 2 months, I think there'll be a second order impact also in there. Okay. So there'll be job losses, and already IT is not hiring. So although GST cuts are coming, which will boost the festives, but what happens after festive?
Correct. BSE first, right? So we're not yet certain how the regulations will change, and so therefore this is all in anticipation of something happening. What do you think about that?
So we don't hold it in the portfolio, and as I've always said that we were at the peak of, I would say, retail euphoria in the markets before this tariff attack came, and so I was not very gung-ho about capital market related stocks. Anyways, these are great businesses, great institutions, I would say, but the valuations which they are commanding, and so the earning growth which is baked in, people might get disappointed with that. That was my view earlier. I still hold my view.
Suzlon, Suzlon has been under a tad bit of pressure as well, right, on the price front.
So I would say that, see, Suzlon or Inox Wind, I think more and more, I would say, localization and that kind of theme is prevailing in the renewable energy sector, that we want to encourage the domestic manufacturing and domestic parts. So it should be good for, thematically it is good. We don't hold it in the portfolio.
Any renewable players that you have?
No, we are not holding any particular. So we hold NTPC, but that NTPC is conventional, not renewable.
Okay.
And thermal plants are coming up left, right, center, right? As Torrent and Adani have shown right now as well. So clean energy is welcome, but conventional energy is not out of the window when it comes to India. And in fact, a lot of other countries as well. Europe too has had this issue when they are actually going back to thermal plants as well.
But the sheer demand of power in India, it's not possible, even though we have and we're building towards having a significant amount of generation capacity. How much gets produced and supplied to the grid is ultimately the backbone is going to be thermal.
And plus,
I just actually wanted to come to you on your take on Reliance, on RIL, because a little bit of concern over the holding company discount. It's an IPO versus, other options that could be there. The stock did not perform too well, and if we need actually the Nifty to lift, then Reliance has to come into place.
Reliance, I am very positive. I am very positive. It is one of my top holdings. And in my view, 18 lakh crore market cap for such a huge amount of assets, especially Jio itself. Suppose holding company discount, if we give even if we give 20% holdco discount, then also it is around 585 rupees per share. for Reliance in terms of Geo value. Retail value is around 700 rupees per share. So, around about today's price, which is 1357, I am getting by adding just valuation of Geo, retail, both after 20% holdco discount and 60% of oil to chemical business. So, 40% of oil to chemical business, new energy business, which is supposed to be adding more than oil to chemical business EBITDA in next 5 to 7 years as per the chairman. The biggest option value is FMCG, which is right now just 11,400 crore last year. This quarter was 4,300 crore. It is likely to touch 20,000 crore this year, and in 5 years they are aspiring for 1 lakh crore. Imagine 1 lakh crore FMCG business will get what value? If they are able to execute it with a good margin, right? Third is the Reliance Intelligence has also come. Now AI, everybody is talking about AI. Now India's largest company is talking about AI, and that too in partnership with Meta and Google.
So you think there will be a reversal today?
So basically, see, day-to-day movements I cannot predict, especially in a stock like Reliance where there is so much of hedge funds and those kind of things. But I would say that it is, in one line I can tell you that it is a 15% EBITDA CAGR company available at 10.6 times EBITDA on FY26, which is very rare, with lot of option values in new energy, in FMCG, in AI, a lot of values, and oil to chemical business refining outlook is good.
Would you have preferred a demerger of the Geo business, or are you okay with IPO?
But that's not possible, right? They have to give the exit
Otherwise,
to the people who
correct.
put
And
that is true.
plus promoter stake would have reduced
60%
significantly.
is ownership.
What happened in the weekend as far as Karnataka is concerned, and for those watching us in Bengaluru and in the state, you know, you're going to have an impact in not just what the stocks will do today, but as property owners as well. So they have doubled property registration fees from 1% to 2% effective August 31st, 2025, raising the total transaction cost to 7.6%. This step is to meet the Department of Stamp and Registration's FY26 revenue target of 28,000 crore rupees. Anushi joins in with more details. Now, from 1 to 2 may not sound so much, but it is definitely doubled, and when taken on the base pace of high-selling luxury flats in Bengaluru, it can be a hefty packet, Anushi.
Well, right, Tamanna, you know, as you just mentioned about what could be the likely impact, let's walk through what's happened now. Now, if you are looking at this property registration fee, now that is doubled to 2%, as you just mentioned. This is from the effective rate of 1% that we are looking at. While this move was considered as a part that was something just expected in the state, but the effect was either on the stamp duty charges that we are looking at, or rather on the property registration fees. Now, this effective 31st of August is what we are looking at, and with this, you know, if you are looking at the total fees that we are seeing, that is effectively increased to 7.6% from what was earlier 6.6% or odd so. But you know, the Karnataka government has made a comparison in terms of how this differs with other south states as well that we are looking at. So if you are looking at a comparison, Tamil Nadu has about a 9% of a total fees. This includes cess rate as well, along with the stamp duty and registration fees that we are looking at. While for Kerala, the stamp duty charge is comparatively higher at 8% as compared to the 5% that we are looking at for Karnataka, which brings the total to about 10%, and Andhra Pradesh about similar rates that we are looking at about 7.5 to 7.6% or also. But why is this move in place? So a couple of reasons over here. Now, if you look at the first quarter, there was a decline in terms of where the property registration fees revenue was concerned in the first quarter. In fact, in FY25 also, if you look at the overall guidance that the state had given was for 24,000 crore, and this is despite the revision from the 26,000 crore that we are looking at. So the net what we are seeing a revenue of around 22,500 crores. So we are already looking at a shortfall. So for FY26 remains a crucial year for the state, considering that they have a FY20, they have a 28,000 crore in place. So this would bring focus on a couple of stock that includes Brigade Enterprises, Sobha, Purvankara, Prestige Estates as well. So this is the overall picture that we are seeing, likely impact on some of these players in the southern states.
Okay, thank you for that, Anushi. And if I add to it from just the fact that there were layoffs in IT companies, there is a lack of clarity on whether there will be wage hikes and what is happening there. AI coming in is anyway going to change the hiring pattern. So Bengaluru real estate companies specifically seem like they might be in a bit of trouble, Parag bhai.
So basically, I have taken this view since long. So although I liked many of them like Brigade and all, but I have not bought. I have bought only in real estate. I have only DLF and Oberoi in my portfolio. I have not bought into Bengaluru because this was my thought process from last 6 months to 1 year. That if IT is not firing, then Bengaluru real estate might suffer. Of course, up till now, the stocks have not, stocks have reasonably done well actually after, if you just exclude recent correction. But I would say that this was my call earlier also. And that's why, in spite of liking the companies actually, I have stayed away from that theme.
But you're positive on IT in some pockets.
That is a valuation call.
Okay.
That's a valuation call that at 4% dividend yield, I would like to buy Infosys and those kind of things.
Okay.
Yeah. But Parag bhai, in terms of market impact, all right, geopolitically everything is nice. In terms of market impact, what do you think Street needs to see to change this sense of bearishness and pessimism, which undoubtedly has crept in?
Yeah, so basically two important things, right? GST rates will come in. And in my view, government will focus on reducing the burden on the middle class, and so GST cuts will lead to a price reduction.
Wouldn't it have been priced in already since the
No. So that can be. So for example, we have seen some rally in auto, some rally in FMCG, some rally in consumer durables. So that is partially getting priced in because the event is very near by. But I would say that, so in spite of very dull and sluggish sales in August for consumer durables, people are keeping the hope, right, that GST cuts will help boost the festive season sales at least. Vijay Sales has gone on record saying that they expect 15% growth YOY in this Diwali. Right, so I would say that it is partially priced in. For example, all these AC stocks and consumer durables have recovered. All right, so I would say that it is partially priced in. So that one is GST, and second is of course what happens ultimately to tariff. In fact, my only worrying point is this 50% tariff stays for long. Then it's a problem because there are many sectors. The textile sector employs 4.5 crore people, right? Jewelry sector. You go to Surat and jewelry and everything is.
But not all of that is going to the US.
No, but so for example, home textile. Let us take one example. Home 70% is export to US. Now, how soon we can find other markets which will offset the US demand? US is a huge market, right? So that's a problem, and it will see if suppose if you think as if you are a promoter for 2 months this 50% tariff stays and you don't get a solution, then the natural course is, the people will lose jobs, and that is the second order impact which I am absolutely worried about.
Yeah, and okay, we are looking at alternatives, Africa, Australia, we're now exporting rice to Philippines. So a lot of these things are happening, but we'll have to wait and see where it pans out. In fact, Pearl Global, let me just pull up Pearl Global in the pre-open session, and I saw a pop there. Maybe Pearl Global though has come on record to say that they don't get as impacted because they have enough facilities outside India in some of these lower tariff nations. But Shrikant Chauhan with us this morning. Shrikant, very good morning to you. How are you looking at the indices? And then let's get your stock picks as well.
Yeah, good morning, Tamanna. Good morning, everyone. For indices, our view is that we are seeing very clear-cut pressure on the markets. Whenever there is a rebound in the market, on intraday basis only, we are seeing good amount of selling pressure, and most of the time the market is breaking all its important level. On Friday also, the market has broken the important level of 24,500, which is negative. And based on its technical formation, I'm expecting market to move towards 24,200 or 250 sort of levels in the near term. The move is like quite gradual, and we need to be stock specific in this market. At higher levels, certainly, unless and until the market is not crossing this 24,800, we cannot expect any major activity in this market.
Okay, and individual stocks, let's run through them quickly.
Yeah, in that space, we like Mahindra and Mahindra, which is around 3,200 levels. There we are expecting target close to 3,350. As I mentioned, we need to be buyer in those stocks which have fallen to their important support levels, and we should be value pickers in this market. So we like Mahindra and Mahindra at current levels. with a stop loss close to 3140 with a target of 3,300 and 3,350 on the higher side. The other stock which we like is Aegis Logistic, and most of the time whenever the stock has fallen to 675, 680 levels, we saw a good amount of recovery in the stock towards 750, 770 sort of levels. With a very short-term view at current levels, it is quite attractive. It's a buy around 675, 676 levels with a target of close to 700, 710. We can keep a stop loss around 660 for the same.
Plenty of triggers for Mahindra and Mahindra as well, not least of which is going to be the volume picture that you'll get over the course of today and tomorrow. But let's go to the big brokerage call of the day, and we've got an initiation of coverage on CG Power by Morgan Stanley, and we've got Hiral joining in to tell you what they're saying. Hiral, morning.
Good morning, Alex. It's an interesting note by Morgan Stanley on a CG Power. They've initiated an overweight and they have a target price of 799. What is interesting is they're calling CG Power India's manufacturing proxy. Apart from this, if you talk about CG Power, it's India's most diversified capital goods player, and it has strong presence in verticals like manufacturing. When you talk about the motor franchise, it is also a beneficiary of strong growth in power, where they deal into transformers and switchgears. And the additional point is that now they're aiming to build capabilities in critical sectors like semiconductors as well as railways. Now, to add to this, if you talk about the various segments in terms of industrials, Morgan Stanley is expecting the revenue and the EBIT CAGR growth, which is the compounded growth, over FY25 to 28 to be 14% and 15% respectively. So again, that's a strong double-digit growth that you're talking about. In terms of the power segment, they're expecting the revenue and EBIT growth between FY25 to 28 to be in that 35% to 42% bracket. And semiconductors, they're expecting a peak asset turn of almost 1.9 times by FY31. So when you talk about the various businesses, the kind of capacity that they are adding, and to add to it, the increased order inflow from the railways, these are the two things that Morgan Stanley is betting big on a CG. And if you talk about 2025 as a year itself, it's been a pretty tepid year for CG Power. So the propensity in terms of growth seems to be very strong from here on.
Okay, CG Power in focus. I'm just going to pull up Bajaj Auto also. Remember, this is the morning where you're going to hear all of the sales numbers coming in. This is a pre-open session which has settled now, so we'll wait and see how it really moves down. Total domestic two-wheeler sales have come down 12% year on year. Two-wheeler exports have gone up 25%. This is a pattern that we've seen as well for the last several months, so keep an eye out on that. Total two-wheeler sales, though, have gone up 2% because of the export factor, but the domestic one is what is continuing to drag down. Commercial vehicles have also done okay, 21% up year on year. And total two-wheeler sales are slightly above NDTV Profit estimates at 3.4 lakh units. So those are some of the details from Bajaj Auto. Would you look at any of the auto companies? And you know what comes to mind is what Royal Enfield put out over the weekend. And I think we have that post that he put out, Siddharth Lal put out on X, where he said very clearly that don't do this thing that 350cc becomes a higher bracket, below becomes a lower bracket. And of course, it hits Royal, it hits them very specifically. But nevertheless, do you think that auto is something that you'd nibble into right now?
So basically, yes, as I've always kept saying, that TVS and Mahindra remains on my radar, always on a good significant decline or 10% or 8% correction from their highs. I always look to buy those stocks. Looking at what is going to happen in GST, I think I'm getting more constructive on Maruti. We have started buying Maruti and the auto component supplier to Maruti like Motherson Wiring, which we discussed last time. So I would say that, and my gut feel is that of course 28 to 18% will happen, but I think government will look at what is essential for a common man. They'll not just forego revenues on luxury items. That is my view. Of course, Eicher, Bajaj Auto, they all will.
So Maruti, you're saying because of small car player?
Yeah, because 1200cc and below is 69% of Maruti's sales. So Maruti looks, and after so much, so small cars have not seen a good times from last, since COVID, actually. So after a long time, I think Maruti is coming back.
So, okay. So,
Of
Maruti.
course, this month's volume will not be good. So today, if the monthly volumes are going to be reported, it will not be
No,
good.
that's okay. Our question
It's a
is
GST
from the
related thing.
GST point
Yeah,
of view. Question
exactly.
is from
Yeah,
the
yeah.
GST point. Shrikant Chauhan, any view on any of the auto plays?
Yeah, we like Bajaj Auto, which is currently around 86.30, 86.50. And based on its technical formation, I'm bullish on it. I'm expecting stock to move towards 9,300, 9,500 sort of levels. The stock is having excellent support between 86.50 and 85.50 levels. So in case if there is any lower opening or even at current levels, we should look for adding these stocks with a positional point of view.
Okay. You know, the top gainer is Torrent, and we spoke about this one that there is a tactical buy plus a very large victory. A lot of power companies, right, top 3 in the Nifty 500, Torrent Power, Godari Power, CG Power. So that space looks okay. Ola Electric still in the green. Shrikant, any thoughts on Torrent? And for somebody, and if you know, aside of Torrent, one more name I'm throwing in right there. For somebody who's missed this rally in Ola Electric, is it a good time to climb or should one be guarded?
Yeah, I think what you're saying is right. For Torrent Power, we should look for taking some tactical buy in this market because the stock is very close to its lowest low level of 1200. It was around 1200, during the month of February 2025. And now again, it is coming back to the same levels after hitting the levels of 1600, 1700. So it's a double bottom sort of formation that we can expect for Torrent Power. At this level, it looks quite attractive with a stop loss close to 1150 for positional traders. The other stock on which you asked is this one, that is Ola Electric. And there also, we are of the view that the way there is volume expansion and rise in the price, it is very clear that this stock is heading for the levels of at least 65, 68 in the near term. 58 is definitely going to act as major resistance because there we saw some selling and profit booking. But broadly, I am of the view that for next couple of weeks, the stock may consolidate between 58 and 52 on the downside. And eventually it is heading for the levels of 65, 68.
65, 68 from 55 right now. Wow. Parag bhai, quick take.
So basically, I would like to say, see the moment company shows cash profit, okay, I will be interested.
But M&M, would you be a buyer because
Parag
of
bhai,
the,
baki sab theek hai. Where is the cash
I
profit?
need to see. It is PAT plus depreciation.
It is not in my circle of competitors.
Correct. Yeah. So let it show. So Bharti, for example, and I would say that many of the market experts, like Ramdev Agarwalji and Samir Arora, all of them bought Bharti at the rate of I think around 45 rupees. At that time, I was not a market professional, but I was seeing that they turned their corners in terms of the cash profit. So that was I would say, an inflection point in Bharti's life cycle. And that time also, it was available at only 45 rupees. And see how much wealth it has created that. So I would say that I would like to buy companies when at least they show cash profit. Of course, it might be late and I would then miss it, but that's okay.
Okay. Okay, well, Shrikant, the Ola call is interesting, but if I had to push you for one key top call, 20 seconds, Shrikant, which one would that be today?
No, I think CG Power looks good, Niraj. Here, the stock has formed very clear technical breakout sort of formation. And from here, the stock can move towards the levels of at least 720, 725 sort of levels. So at current levels also around, if there is any higher opening, then close to 700 levels, we should look for adding CG Power with a target of 725.
so Shrikant, the question to you, at the index level, we've now gained for 3 out of the last 4 weeks. And that is after concerted selling that got seen on the entire pack, where we saw 5 straight weeks of losses. Would you initiate at this point for any of the counters in the IT pack?
Yeah, Alex, I think, see, from the IT space, most of these stocks have fallen to their extreme levels. And this time, when the market was falling, most of these stocks were forming higher bottom sort of formation. So, based on technicals, it's a bullish indication that this particular space was giving. But because of a lot of uncertainties in the global markets and interest rates as well as 10-year bond yield and all, we were not that confident to take any specific call on the entire sector. But yes, we are specifically bullish on stocks like Infosys, we like Coforge, and we are also bullish on InfoEdge, that is Naukri.com. So these are the stocks on which certainly we should look for keeping a close watch with a medium term view, not with a very short term view, because it's very difficult to take very short term view on the stock. Yes, of course, if there is any specific news flow, then we should look for taking very short term call with a view of next 1 or 2 days. But if there is a medium term view, then I think we should look for adding Infosys as well as I said, Coforge. Yes, we also like Tech Mahindra. There also we are specifically bullish.
Shrikant, just stay on, but I've got just one question. Now that we are on the eve of the GST cuts coming in, are the consumer durable plays something that you might want to bet on because the GST cuts will spur demand? Plus, I mean, the low base for the last 2 quarters will also help them, right?
Yeah, so we have, we are from GST perspective, in my portfolio, I'm betting on auto components who are, like I said, Maruti and TVS. And
consumer durables?
Consumer durables, I think, have rallied. And let's see the fine print now.
No, the AC manufacturers, for example, they haven't rallied, right?
Yeah, so Blue Star we have, for example, in our portfolio.
But you are not a fresh buyer into them?
Because they have already rallied into going into the event, and now event is just a few days away. So why, after a rally, I don't want to jump in.
Got it. Okay. Okay.
So, but only Blue Star from the...
Yeah, from the AC space. And of course, auto, I said. So basically,
What about
and
IT?
FMCG also.
IT today?
So IT makes me happy that IT
But you're not going out and buying now.
He's already bought.
I already bought, so I'm equal weight IT.
Sure.
Equal weight IT, okay. IT. What is the reason that you see? I think it's the US Court's federal appeal, which is showing some action over there, perhaps.
See, there is no tariff on IT because it comes under services. Luckily, fortunately for India, that IT is not facing tariff problem. But it is a valuation call. Quality sector which throws you so much of free cash flow available at 4% dividend yield, 6% free cash flow yield. That is what is attracting me.
There is a case for it. Okay.
It's a valuation call in a quality sector, I would say.
Okay, all right. Thank you so much, Parag Bhai, for joining us this morning. I just want to take you through something interesting that has come in from this Morgan Stanley India strategy note, and Rhythm Desai is who has authored it. He says it is about confidence and growth. The equity market may be underestimating the likely turn in the growth cycle. The earnings and market peak is in front of us. There is a strong case for re-rating. India is likely to gain share in global output in the coming decades. Immediate return prospects depends on confidence in the growth cycle. Remain confident and ahead of the consensus. Soft earnings growth patch seems to be ending, but market is not yet convinced. He says domestic cyclicals are better than defensives and external facing sectors. His overweight financials, consumer discretionary and industrials, underweight energy, materials, utilities and healthcare. Says this is likely to be a stock pickers market. But you know, time and again you've seen quite a bullish view coming in from Rhythm Desai, and that point that he's making is good. I mean, you're above 24,500 on the Nifty now. Shrikant, you want to just talk about levels very quickly? We seem to be gaining some momentum.
Yeah, absolutely. Like today's open and today's lowest level is almost same. It means that today there is like some buying strength in the market, which was not visible since last almost 1 week. In case if we see the market is holding around these levels, then we may see the levels of 24,600, where it has next leg of huge call writing base. And on the dismissal of that, the best case possibilities are close to 24,700. So these are the levels on which we need to focus. Today, on the dismissal of 24,600, we can expect short covering in this market. But in case if there is any drop, then close to 24,400, 450, the market is having good amount of support. So till the market is not crossing or not breaking the level of 24,400, we should look for taking some contra bets of going long in the market.
So you'd go long right now, and what would be your strategy?
Yeah, in that, as I mentioned that the IT stocks are doing well today, so there we should look for taking some more contra
On the
bets
index.
because
I mean on the index. What would be your positioning on the index?
on the index, based on technicals, whenever there is a open and low it's same. Most of the time we look for taking contra bets of going long in this market. So 24,430, which is today's lowest level, should be the final stop loss for creating any long position. So broadly, we can keep a stop loss at 24,400 and we can expect 24,600, 24,700 on the high side.